Now it looks like private equity is finally partnering and investing into college football teams, starting with the University of Utah. Check this story out. Yahoo Sports, there's a $500 million private equity deal right now for investment into the University of Utah's athletic department. The equity firm doing this is Otro Capital out of New York. They invest in sports, media, and entertainment. They're minority owners in the Alpine F1 team. Alpine, however you say that, and other sports teams as well. How they structured this deal is pretty interesting. The private equity firm and the university department created a new company called Utah Brands and Entertainment LLC. This is its first of a kind partnership between the university's athletic department and equity partner. An executive team from Otro Capital combined with the athletic department personnel will lead the creation of this new company, which is a for-profit company. The university retains majority ownership and decision-making authority of Utah Brands and Entertainment. Otro marries the capital infusion with a team of experienced operators. A president from the outside of the university will preside over the company and report to the board, chaired by Utah Athletic Director Mark Harlan. Guy right here that was pretty salty after the BYU loss, if you remember this last year. What a good memory. All right, back to this. So the interesting wrinkle is they're allowing prominent donors to also purchase a stake in the Utah Brands Entertainment new company. So the more than $500 million capital figure includes both 9-figure cash infusion from Otro as well as those capital commitments from donors. The company's goal is to generate more revenue across ticketing, concessions, corporate sales, sponsorships. They're essentially going to be married to the athletic department to create a lot more money and good returns. Universities have played with this idea, Kentucky, Michigan State, and a few others down here, but none of them really went through with a private equity partner like this of this size, by the way, $500 million. For this partnership, in exchange, Otro will earn a large percentage of the annual revenues generated from Utah Brands Entertainment. So it has a minority share, but it earns most of the revenue as it splits the funds with the university. Now, an exit strategy in 5 to 7 years, because most funds want to exit, this can exit and the university holds the rights to purchase Otro's ownership stake. So they have a first right of refusal to buy out the stake in this new LLC for-profit company. Everyone knows this game well. Obviously, they invest, like I said, Alpine racing team, $200 million in that and a few other ones here. The question for me, though, is Utah is a state-run school. It's not a private university. And so does that mix this tax exemption status they have as a state university mixed with a private equity firm to boost their athletic department? I'm not sure. We'll hopefully get more details in the next few days. Comment down below what you think. This is a new dawn of private equity now entering college sports.